Okay, today we're working on the health insurance exam. This is going to be all health, no life. If you're taking the combo exam, life and health, that's actually my recommendation is to take life and health together. You'll have fewer questions on each one. It's a little bit longer, more detailed exam, obviously, if you're not going to need the life insurance part, or you're not going to need the health insurance part because you're just going to sell one or the other. You might just want to take the solo exam. But if there's any possibility you think you're going to be selling life and health, take the combo exam. It's going to save you some money. It's also going to save you some time because a lot of the tests have sort of some duplication. So all of the insurance concepts, your definitions, your state-specific rules, your prohibited acts, all of those things are the same regardless of what exam you take. Even property and casualty, a lot of those, parts of the policy and all those are going to be on that exam, and they're going to be exactly the same as on your life and health exam. So this one is going to be all health specific. We're not going to have any of the general insurance concepts. We have those a lot in some of our other tests. We're also not going to have any of the prohibited acts. Those are also in some of our other videos. This is all going to be things like how that health insurance stuff works, okay, and what those health specific items are. If you're taking life and health, I recommend you take this one and go through it because all of these things are on the combo exam, and these things are for sure on the health insurance exam. And most of the things on this part video are going to account for more than 30 to 35% of that exam. So make sure that you have a good grasp on all of the topics we're going to hit right here. Here we go. Okay, getting right into it. HIPAA. This is the Health Insurance Portability and Accountability Act. I don't think you're going to need to see that all spelled out. Just know it is HIPAA. It protects patient privacy, patient security, confidentiality. I think you're going to see a couple questions on that, on who governs basically keeping all patient stuff private. That's going to be HIPAA. And if you violate HIPAA, big consequences. So just know that HIPAA protects customer patients and privacy, okay? Okay, getting right into types of policies. You have basic hospital coverage. This is going to cover your room, your board, and basic hospital charges. So think of this as all things in the building. Like you walk in the hospital, the things that happen in there that have to do with them, not people, room, board, and basic hospital services. That's going to be your basic hospital coverage. I don't know anybody that has that, but it's going to be something that is on the test. So just know basic hospital. Okay, next up is basic medical. Lines up a little bit more with Medicare Part B, maybe, carries similar coverages, covers the people, your diagnostic, your care. So just go through your study material and know the difference between basic hospital and basic medical. Nobody has these policies, I don't think, and they probably do. I think the appeal of them this is the test question that I see happening, is a test question saying, what is the appeal? And I think that it is that they are normally first dollar coverage. So they cover without a deductible, so first dollar. So if you see that question about it being first dollar coverage, that's probably going to be the answer. Of course, read the whole question and read the whole answer. But that's sort of where I see them asking about what the benefits of basic hospital or basic medical actually are. Okay, this is getting into more what people actually have. Major medical, this is what you're more familiar with. This is going to be your deductible, coinsurance, out-of-pocket limits, the stuff you're used to seeing for medical coverage. So just know those, that major medical aligns more with what most people have, and those are the ones you're more familiar with, where you have a $2,000 deductible, say, you have a copay of 20%, and maximum out of pocket of, I don't know, $10,000, and then you sort of have that. So just know major medical and how it differs from basic medical and basic hospital is that they are usually first dollar coverage, okay? Okay, now we're getting to what we all really actually have, which is your HMOs. HMO is a health maintenance organization. This requires you to have a primary care physician. I would know that. He is considered to be your gatekeeper. He has to refer you to a specialist. This is how they cut down on costs. So he's the guy that says you need to go see an ENT or a pulmonologist or whatever. So this is an in-network. You're only allowed to use doctors in the network. So and if you have health insurance, you probably are quite familiar with HMOs. Okay, after HMOs comes your PPOs. These are your preferred provider organization. Similar to an HMO, there is a network, but you have some flexibility. You can go see a specialist without a referral from your primary care physician. You don't need to have a primary care physician. You can see doctors out of network. For some things, obviously, you'll pay a higher cost. Your in-network guys are usually covered completely, and your out-of-network guys are covered with a percentage. So PPO gives you more flexibility than an HMO, but still tries to control the costs using a network. Next up is your point of service plan. This is a hybrid of your HMO and your PPO. Has, I guess, the best of both worlds. I don't know what that would be, but it has the flexibility of the PPO and the lower costs, I guess, is the benefit of the HMO that it's trying to capture. So again, you're going to have a network, but you're going to have some of the flexibility of a PPO where you can use your preferred doctor that you want without a referral. Okay, unfortunately, this is one a lot of us are familiar with, the high deductible health plan. This is one where you have a high deductible. It allows you to keep your premium low. Obviously, you're going to want to be healthy if you're going in for one of these. But it can have higher out-of-pocket costs because you're saving on those premiums. So your deductible could be $6,000, $7,000, $8,000, $10,000, and that can be a lot for most of us. So if you want to keep your premiums low, that is one way to do it, but it does come with the risk of having extremely high out-of-pocket costs if something were to happen. Okay, you have to have a high deductible plan to get an HSA. Know that. So an HSA, I think that's highly testable, that you have to have a high deductible plan to get an HSA. And of course, an HSA allows you to save money that you can deduct from your taxes. So it's pre-tax money. And as long as you use it for medical expenses, it stays that way. If you decide to take it out of your HSA and use it for non-medical expenses, there is a tax penalty if you are younger. So just be aware of that. I don't think you're going to get into a lot of taxation issues for the exam, but that penalty is 20%, but you can withdraw it after you're 65 without that penalty. So what a lot of people do is they put money in their HSA when they're young for when they're older, because it rolls over year to year, and that money is basically pre-tax. So while you're earning the bigger income, you haven't retired yet, people stick their money in the HSA. They use it for their medical expenses. If they don't use it for their medical expenses, it rolls over. And then as you get older, obviously you get more and more medical expenses, and now you're using tax-free money to use those. And so that is just what an HSA does. So make sure you understand. I don't think you're going to have a lot of questions on the tax implications, but I think you're going to have the question about needing it to be a high deductible plan in order to get one. And also that it has to be for medical expenses for you to take it out, okay? Now, I normally would put this one later with the group stuff, but since it's often confused with the HSA, I'm going to do it right now. This is the flexible spending account. This is totally different than your HSA. HSA is something you do on your own as something because you have a high deductible plan. Flexible spending account is something your employer does for you. So you're still paying the bill. It's funded by you. You still take it out for medical expenses like an HSA, but there is a maximum annual contribution, and it is normally use it or lose it. So most people put money in there. It can be used for things that go beyond the health thing. You can do daycare out of there, but you have to normally use it in that calendar year. It is an employer-sponsored plan that allows you to pay for eligible medical expenses tax-free with your tax-free income. So certain things that aren't part of the HSA plan are allowed to be in this. Don't mix them up. Flexible spending account is sponsored by your employer, and it's a use it or lose it. The HSA rolls from year to year. So that is one you set up for yourself, and it rolls from year to year if you do not use it. So make sure you know the difference between the two, because I think that's one where they're just going to ask you some weird question to trip you up. Okay, let's understand copays. Copays are what you pay when you actually make the visit. It's kind of like an in-person fee. It's a way for them to reduce the cost by giving you some skin in the game. So sometimes $20 to see the doctor, sometimes it's $30, sometimes it's $100 for a specialist. So that's part of when you set your plan up. Copays, you basically pay that, and then your insurance company pays the rest. So I would know what copays are. You should know that just from going to the doctor, right? So the next one I would understand is maximum out-of-pocket cost. So maximum out-of-pocket cost is the cost you're going to pay total. There's going to be on there is a stop loss. You may see that term, but basically it's a cap on how much you can pay in that year. Once you've paid it, your insurance company pays the rest. You don't pay any copays. You don't pay any deductibles. You don't pay anything because you've hit that amount. So say your maximum is 10 grand. Once you've hit that 10 grand, whether you satisfied it in copays, deductibles, or however you paid it, you're done. It's usually high, right, to keep it so they don't have an amount that they just keep paying. It's not gonna be $1,000 usually, but that's the insurance company pays the difference after that. I don't know if you're going to see a lot of questions on this. You may see it with the term stop loss, and just know that that is the maximum out-of-pocket cost. Okay, rolling right into Medicare. I have a whole nother video going over all the details of Medicare you might want to check out if you're still having trouble understanding it. Medicare is made up of Part A, Part B, Part C, Part D, and then there's a whole bunch of other letters like G and L, and those are basically plans that people can buy from private companies that maybe have been sunsetted. So sometimes there's I think G is still around and N is still around, but just know that it's not A through Z. They do retire certain letters, but your basic parts of Medicare are A, B, C, and D. So make sure that you know all of those parts and what each one does, because I think you're going to see significant questions on them. Medicare Part A. So I like to think of this for the exam as well as when I'm selling Medicare in the times that I have as the building. Okay, it covers the things of the building, the hospital, the home health care, the skilled nursing facility, hospice care, the places. For me, that made it make a lot more sense. It is free. Once you're 65, if you qualify, you do not pay for Medicare Part A. Okay, rolling right into Medicare Part B. For me, this was easiest to remember by remembering the people, and I still do that now. So the people, this covers doctor visits, outpatient care, preventative service. If you're going to see the doctor, he's covered under Medicare Part B. Medicare Part B is optional. If some older people are still working, they may not want Medicare Part B because they've still got medical coverage from work or something like that. Medicare Part B, they take some money out of your Social Security for it. So there is a cost for Medicare Part B. Okay, Medicare Part C, this is where you're getting into those ones you see on TV. Your Medicare Advantage, where they are blended plans. They cover Part A, Part B, Part D, your drugs sometimes give you extra benefits, sometimes meals, sometimes rides to appointments. You've heard all the ads. You know exactly what I'm talking about. So those are your Medicare Advantage plans. Those are sold by private companies. And then your Medicare goes everything through them. That's how they're able to give you some of those extra things, is you no longer do it through Medicare. Your Medicare is then paid to the private company, and they handle your care through their program. Once you are selling Medicare insurance, if that's where you're going with your health license, these Medicare Advantage plans are probably what you're going to be selling a lot of. So good to know them, good to get that wrapped right up into your head on what all the different parts of it are, because there's a lot of rules with Medicare. Medicare Part D, this is your prescription drug list. This is where Medicare Advantage plans roll this right into themselves, but you don't have to have one of those. If you just want to have A, B, and D, you can have that and get your Medicare drugs covered under your Part D. There is a cost for Part D coverage. I would highly recommend checking out our other video where we go into really good details on Medicare, because there are a lot of really weird things, like things about pints of blood and where your surgeon is. And there are questions that are on the exam. I will guarantee you're going to get a question about which part of Medicare does surgeon benefits come from. It's Medicare Part B, but there are weird questions that they use over and over and over again. So please check out that video just to make sure you've got know the ins and outs of Medicare backwards and forwards, okay? Social Security, it's part of your health exam. So Social Security provides benefits for retirement, disability survivors, and they manage the Medicare. Part of your Medicare will come off of your Social Security if you elect to get Part B. So understand that Social Security has a work requirement. You had to have worked for 40 quarters or 10 years to be fully invested for Social Security. Social Security also covers disability for income, health insurance, conditions and rehabilitation. I would understand Social Security disability. I would understand how the quarters break off. If you're younger, the 40 quarters is a smaller amount. I don't know if they're going to make you calculate that or not. I would definitely know 40 quarters in 10 years of work is what you need to be fully Social Security. And I would know that Social Security covers disabilities. And I would know that it covers some terminal illnesses, regardless of age and qualification. So Social Security covers terminal illness. Like I mentioned, it's going to be your cancer, as well as ALS, Lou Gehrig's disease, and end-stage renal failure. I don't know if you're going to see a question on the exam. It might just say terminal illness, but it might also say end-stage renal failure, which is kidney failure, just to trip you up. Okay, moving on. The Affordable Care Act. This is Obamacare, as everybody knows it, but the Affordable Care Act provides marketplaces, expands Medicare, gives insurance reform and subsidies for premiums. I don't think you're going to see tons of questions, ins and outs on the ACA, but you do need to know what it does. You do need to know that people buy insurance through marketplaces with their state. So I would do a little bit on the ACA if you have study material and just know the details on that. I don't think there's going to be a whole lot of questions on the ins and outs of the ACA, just more that it is a government program that provides subsidies and that you buy your insurance through a marketplace. Most insurance, including the ACA, have open enrollment times, even if you're getting insurance through your employer. This is a set time when individuals can enroll in health insurance. It's often in the fall, in October, November. And then you pick an eligible plan. It begins often the next year on January 1st, and your coverages take effect after the enrollment period ends. Then you're not allowed to make changes unless you have a qualifying life event. So I would know that a qualified life event is marriage, divorce, birth, or loss of your health coverage. Those are also qualifying life events for COBRA. All right, I would know this one inside and out. COBRA is your continuation of your health insurance after you've lost it with your employer. Qualifying events, obviously, like we just talked about, get you COBRA. Your employer is allowed to charge you up to 102% of the premium. The 2% is for their administrative costs. One question I think you're going to see on COBRA is how many employees a company has to have before they have to offer COBRA. So I would definitely know that COBRA applies to companies with 20 or more employees. I think that is one of the most highly testable questions when it comes to COBRA. Okay, Medicaid. I don't know if there's going to be a lot of questions on Medicaid, but you need to know that it is for low income. People can have Medicaid and Medicare at the same time. and it is basically a low-income medical plan to provide health coverage for people. They have to meet a certain qualification to get it, okay? Moving into long-term care. Long-term care insurance is private insurance for you to basically have long-term care, to go into a nursing home, home health care, assisted living, maybe have an adult daycare, and that is what long-term care insurance is. One of the highly testable things about long-term care insurance is going to be your activities of daily living, also ADLs. These are things like eating, bathing, dressing. And if you cannot do 2 of these things, then you are usually eligible to enact the long-term care parts of your long-term care policy. So I'm just realizing now this video is going to be longer than I thought it was. So apologies if that was going to be a quick one. Long-term care. Long-term care has a lot of rules, and it's mostly about protecting elderly people. So they have a 30-day free look period. They can get a full refund of their premium if they cancel it. Obviously, the ADLs that we talked about before, and it is guaranteed renewable. You can't just decide because they've been paying long-term care the whole time when they were young that now that they're old, yeah, let's just go ahead and cancel it on them. So long-term care is guaranteed renewable. So once they're in, when they're younger, they should just keep paying on it because obviously the insurance company can't dump them off on it. So that is one of the benefits, and most of those rules are about protecting older people. Okay, we're going to move right into disability insurance. Disability insurance is mostly about replacing income. Obviously, it does pay sometimes for your medical bills, but normally it is about replacing your income. Short-term disability income, long-term disability income. So those are what people buy disability insurance for, is they are not going to be able to work. So they want to have some coverage to pay those bills. Know that 1/4 of all homes in the United States are repossessed for disability. You don't need to know that for the exam. That will help you sell disability insurance later on in your career, because a lot of people don't understand just how catastrophic disability is for their life. So the basic way disability insurance works is you bought a policy, you become disabled, you put in a claim for your benefits, and the disability insurance policy pays the income amount that was stated in there. So sometimes people pick a flat amount, $3,000 a month, $2,000 a month, whatever they can afford. It will only pay that amount. Normally, it does not pay your entire income. It is just a sort of a supplement. 2 periods of time when you have a disability. One is your probationary period, one is your elimination period. Probationary period is when you first get your policy. Obviously, they don't want you to get sick or disabled people just scamming and buying a policy and claiming benefits 2 weeks later. So normally your probationary period will be something that is like, say, 30 days, 60 days, 90 days. The next one is your elimination period. I think your elimination period is highly testable. Know that your elimination period is the period of time before your benefits are paid. So if you make a claim that you are disabled, your elimination period might be 30 days. It might be 90 days. The longer the elimination period, the lower the premium. So know that the lower the premium you want, the longer the elimination period needs to be. So it could be 30 days, it could be 60 days, 90 days, but the longer that elimination period is, the lower your premiums will be. And do not mix up your elimination period that every policy is going to have with your probationary period, which is just the period at the beginning when you first get the policy. So the elimination period that I think you're going to be tested on is going to be 100%, I'll guarantee this on your exam. This is going to be the Social Security Disability Elimination Period. They may not call it an elimination period, they may call it a waiting period. But the waiting period for Social Security Disability is 5 months. So you do not get Social Security Disability until your 6th month, and that is from the time of your disability. So just for simplicity, if you were disabled in January, you would wait for, say, January the 1st. You would wait January, February, March, April, May, and you would receive a check in your 6th month, which is June. That would be the elimination period for Social Security Disability. May be in the question as a waiting period, but I would definitely know that. I will guarantee that question is on there. Okay, another guaranteed question is disability insurance occupational versus non-occupational. Most disability insurance is purchased on a non-occupational basis. The reason for that is that occupational injuries normally are covered by workers' compensation. So most disability insurance policies are non-occupational. Know the difference. Occupational covers disabilities that happen on your job. Non-occupational injuries cover disabilities occurring off the job. Fall off a ladder at your house, that is non-occupational. If part of your job is climbing ladders at work and you fall off the ladder at work, that is occupational and normally covered by workers' compensation. Let's get right into it. Workers' compensation covers medical benefits, income benefits, death benefits, and rehabilitation benefits. So if you were injured on the job and you file workers' compensation, it's going to pay your medical bills, it's going to pay a portion of your income, and it's going to pay, obviously, if you died on the job, it's going to pay your death benefit, and it's going to provide rehabilitation if you require it. A key term I think you need to know for disability insurance could be presumptive disability. This is something where your condition is severe enough to automatically qualify you for benefits without having to actually qualify for benefits. So things like being totally deaf, totally blind, losing 2 limbs, or a severe brain disability. Those are things that you won't have to prove you are disabled, like a lot of other disability insurance things, because they are so severe that they're just assuming you're going to need the disability coverage. Another disability concept you're going to need to know, because it could be on the exam, is Keyman disability insurance. This is in case you have somebody that is critical to your business and you need to cover them in the event of a disability. The person that receives the benefit is the company, not the individual in Keyman disability, or if you're taking the life exam, Keyman life insurance. The benefit goes to the employer, not to the person, because obviously that person is so critical to their business that they have insured that. This also comes out as a buy-sell agreement. Sometimes it's not for just the Keyman. Sometimes your business partner becomes disabled. You want to insure him for the amount that it would cost to buy him completely out of your business. So you buy a disability policy. You are the beneficiary, not him, and that provides you with the money as the business or the partner to buy the partner out of the business in the event that they became disabled. So we're getting into more of the smaller things here, right, in the health insurance exam, but still things that could be on there. Accidental death and dismemberment coverage. This provides you in the event that you died in an accident, car accident, whatever accident, tree fell on you, or you were dismembered. Sometimes they are called accidental death, dismemberment, and loss of sight. That is what they are at the company I work for. But just know that AD&D is accidental death and dismemberment. It provides coverage if you are killed or dismembered in an accident. Moving on to group health insurance. I think the key question in group health insurance is going to be who is issued the policy. The policy is a master policy issued to the company. So you get ID cards, but you do not get, you do not go through individual underwriting as per people. The group would, just based on statistics and actuarial data, that the people are all this age, we have this many that smoke, whatever. That's how they would determine it. So it is a way to cover people without actually having to do individual underwriting on people. I would know that you can convert a group health insurance plan to an individual health insurance plan if you leave oftentimes. So I would know that, or obviously COBRA would kick in and you would just maintain that policy. So really know the ins and outs of what makes up the group policies. But I think one of the key questions is going to be about that master policy. I don't know why they think that's so important, but that is one of the things I think will be testable. Okay, one of the other smaller policies could be a question. This is basically a policy that pays you cash if you're admitted to the hospital. It's paid directly to the insured. It's called a hospital indemnity plan. You may see that. It's actually a really great policy for people to have if you are selling health insurance. But for the test, it basically just pays you cash in the event that you are admitted to the hospital. And it just works alongside your other medical coverages. It doesn't actually pay your medical bills directly. I think most people know that plan as AFLAC. Okay, just a few other topics. One is notice of claim. You have to tell your health insurance company that you have something go on, a loss, and provide a notice of claim. The biggest rule here is you are supposed to do this in a certain amount of time, or what is reasonably possible. Obviously, if you're very ill, you can't, right? The one time frame that I think is highly testable is that the insurance company, once they receive your notice of claim, they have to provide you with your claims forms within 15 days. That has no flexibility at all on it. They must provide you with the claims forms within 15 days of when you provide them with notice of claim. Then you would fill out those claim forms, and that would represent your actual claim. And you would file that. Those are supposed to be done within 90 days of when you had your loss. But again, because you're the insured person, there is that caveat that or reasonably possible. Because obviously somebody's really, really ill, they can't fill out a form. So on your side, notice of claim, then insurance company provides you with claim forms. That is a fixed 15 days. That I think is the testable question. And then you have, you're supposed to fill out your claims forms and submit them back to them within 90 days. So, and again, that has the caveat of or reasonably possible. Okay, the next one's going to be free look. Free look period is 10 days on a health insurance policy for a full refund. Know that on long-term care, it's 30 days. So 10 days on health, 30 days on long-term care. I think long-term care is most likely going to be the question on the exam. So know that, you know, we don't want to abuse old people. So they want to get their money back after they get to look at their policy for up to 30 days. Okay, misstatement of gender or age. Sometimes on life and health, you pick the wrong one. Those are obviously going to be corrected. They would make that correction, and your premium may go up or down depending on what the correct one should be. I don't know if misstatement of gender is going to be on the test, and I also don't know if the NAIC is going to be on the test. The NAIC is basically an organization that helps define what the rules are going to be and to get each state to be standardized. I would know the rights of renewability for health insurance. But they are conditionally renewable, which means you can be renewed under certain conditions. Some things are optionally renewable. Your insurer can cancel you. Other things are guaranteed to be renewable and are non-cancelable. I would know that long-term care is guaranteed renewable because I really think that that's going to be the question. The grace period. If you don't pay your premium on time, you have so many days before you can just pay your premium before it actually lapses. These are defined by each state. So I would know your state laws on how grace periods work and what the time frames is. A lot of states it's 10 days. If they pay monthly, it's 30 days if they pay annual. And I would know what those grace periods are depending on what state you live in. I think certain grace period things are highly testable questions. So review your state-specific material that you have in your education materials to get that one. It's an easy question for you to get. Okay, just a couple more easy questions. Admitted insurer. This is an insurance company that is authorized by the state insurance department to conduct business. An admitted insurer must obviously comply with state laws. I would know that an admitted insurer can sell in your state, and that's the only ones that can, and that they have a certificate of authority. A certificate of authority is a license for the insurance company. You don't have a certificate of authority. You have a license, but the certificate of authority is the license for the large company to do business in that state. And without a certificate of authority, they best not be selling insurance in your state. So I would know that one. I think that's extremely testable and just extremely easy to get right. Certificate of authority is the big boy license, and that gives them authority to conduct business in your state. Okay, just a couple more before I let you go. These are low-hanging fruit ones where I think you could just get the answers so easy. I wouldn't want to leave them. They are in some of our other videos, so be sure to check those out. Okay, domestic insurer is incorporated in the state where it does business. You're incorporated in Georgia, you do business in Georgia, you're a domestic insurer. Foreign insurer is incorporated in another state. You are doing business in California, but you're incorporated in Georgia. Makes you a foreign insurer, even though it's just another state. And so that one's kind of tricky. People think foreign means another country. If it is truly another country, they are an alien insurer. So alien insurer is incorporated in another country doing business in your state. That's an easy peasy question. Don't get that one wrong. Okay, we have a whole bunch of definitions. We're not going to do them in this video. There is a whole glossary. I'm going to link it in the description. And there is a whole bunch of videos that already have all of the definitions. So please be sure to check those out before you take your exam, because I would say about 30, you could probably pass about 30% of this exam just knowing definitions. But this one, law of large numbers, that means the larger the pool of people, the easier it is to predict the loss. More men that are 70 that you examine to see when they die, the more chance you have of knowing exactly when they will die. So that is the law of large numbers. It is a basis of insurance, and it is such an easy question to get right on the exam. Don't get law of large numbers wrong. This is a free question for the exam. I have no idea why they want you to know this, but just take it and accept it that you got one right for sure. Mutual company owned by the policyholders. Stock company owned by the shareholders. One of those is going to be on your exam. Know that mutual means owned by the policyholders. Stock means owned by shareholders. Two more, I promise. Risk is the uncertainty of loss. You have to, basically, risk is the chance that something bad could happen. The only insurable risk is going to be pure risk, where you can only lose. Speculative risk, such as gambling or trading on the stock market, not insurable. So those are risks. And I'm finally done talking. That was your basic health concepts, as well as a few freebies at the end, just to make sure you get all of your things right. And some of those concepts are right in there. Please check out our free glossaries. They're linked in the description. They're printable. They're just PDFs. You can print them. They're free. And they have all the definitions for you to study. And check out our other videos, because we got a lot of great details on the definitions to pass exams, as well as just a last minute review. That's a great one. And I wish you the very best of luck on your exam. If there's anything you want me to cover specifically, mark it in the comments. I love hearing from y'all. Take care. Have a great day.